Rates, quite frankly, are hovering right around 5%. You'll even see some in the 4.9 range, all right, for 30-year fixed. Sometimes it gets a little bit boring, but interest rates are everything right now to everyone. In fact, the biggest reason we don't have any buyers is because interest rates have gone up so much.
Again with this?
The unknown is what moves markets, and they usually violently move one way or the other. When the Fed announced back earlier in the year that they were going to start raising interest rates, and they were going to raise them significantly and frequently until they get inflation under control, the mortgage market went absolutely wild. We went from like 3.1% at the beginning of the year and peaked right around 6%. The talk among even the experts says, well, we're going to be at 7% by the end of the year.
It's coming.
Well, okay, now I came across this. Housing economists, mortgage rate volatility likely to level off even with Federal Reserve interest rate hikes. Despite an interest rate hike of 0.75% by the Federal Reserve on Wednesday, and additional increases likely still to come, some housing economists aren't expecting another big surge in mortgage rates between now or in the coming months. As of today, rates, quite frankly, are hovering right around 5%. You'll even see some in the 4.9 range, all right, for 30-year fixed. We've already come off. The market reacted violently all the way up to 6%. We've come off that now. We're hovering around 5%. But it's interesting to me that these people whose job it is to pay attention to this stuff have completely changed their tune.
Yeah, I know it. All the time.
People will price in their expectations. If their expectations were the Fed's going to keep raising rates, well, we don't just raise mortgage rates slowly with the increasing Fed rate. All right, we just jump to the end all at once.
And they oftentimes will go too far, too quick, and then scale it back, like we just saw.
When interest rates grow,
What did you just say?
as they go up, it prices a lot of home buyers out of the market, period. And so what we're seeing right now, we're just seeing a lack of buyers. In this same article, it says existing home sales declined for the 5th straight month. In June, down 5.4% May, and then down 14.2% from the year prior. So sales are off. Buyers are frustrated because they can't afford to buy, and sellers, quite frankly, are frustrated because they can't sell where they might have been able to 3 months ago.
Everyone just calm down. Calm down. Hey!
So these people are basically saying that mortgage rates are likely to stay flat through the remainder of the year and actually most likely come down at the beginning of next year. If interest rates can remain stable, then changes in behavior are much more driven by long-term dynamics, which are still solid. A big millennial generation, a boomer generation downsizing, and there's a lot in the housing market that's not going to change as much as people might think.
Well, that's good news.
We get really excited and emotional about changes today, what's happening. But again, overall, we're looking at the fact that the millennial generation is huge and they're buying, and the baby boom generation now is quite frankly starting to die off. All right, they're going to be selling and they're going to be selling to millennials. This market's not going to fall to pieces.
It is important to distinguish between the nation and Arizona, right? The nation is always going to experience less. There are going to be some other cities that are similar to our market, but there's only going to be a handful of markets that are really going to get hit the hardest.
Yeah.
But again, they're still not going to get hit near as hard as
Okay,
the past.
but here just a couple weeks ago, we were talking about potentially seeing housing prices drop from 25 to 35% in Phoenix, and that's still possible. I'm not saying it's not.
Right,
okay,
absolutely.
But we're seeing a lot of strength in the data coming out on the economy.
Might be, but might not be.
In June, U.S. employers added 372,000 jobs, and the unemployment rate remained unchanged from the month prior at 3.6%. So the economy is still adding jobs. All right, our unemployment is still extremely low. All right, that gives us the fundamental underlying everything that there's going to be a demand for housing.
Yeah.
And when the price versus the payment amount comes into line, we're not going to be falling off a cliff. This tracks interest rates and allows you to visually see what they've been doing since about 1974. You just take a look at this graph and that it's a downward slope, but it wouldn't surprise me, and quite frankly, it's probably a lot better for homes if mortgage rates stabilize somewhere in the 5% range, somewhere where we're at right now. And that, traditionally, is still extremely low.